All right, everybody, welcome back. This is Rodrigo Finder with another episode of Asheville Real Estate News. Today, we're going to be talking about how to set yourself up for success from a legal and corporate structure and just get into some of those details about knowing when it's time to start an LLC. Is that even the best option for you? And what that process looks like for you. So today, I'm joined by John Hyer. He's a tax real estate attorney who's been in practice for a long time. He started out as a corporate attorney, started doing some investing himself, and then he opened up his own practice. So going to be taking lots of little nuggets away from this today, and really excited about it. John, thanks so much for joining us.
Glad to be here.
I know you started out as a corporate tax consultant or attorney in the corporate world, and then you moved into your own practice. And somewhere along there, you did some real estate investing as well. Do you mind kind of walking us through that journey?
All right, so I worked for two big accounting firms. This would have been in the mid-90s. I hated it. The politics, the hours, I just didn't care for it. And then I went and worked corporate for an oil company for about 5 years, and I'm shocked I lasted that long. I saw a niche. No, I got out on my own in '02, and back then there were very few accountants or attorneys in the tax world focused on real estate investors. Add to it that it's federal income tax, so I have a national practice. My practice is virtual at this point. Most of my clients call from everywhere. We almost never have someone in the office. That's always a shock. We kind of have to scurry and clean things up when they come in.
Somebody's here.
Yeah, good Lord, put away the porn and the dope, right?
Yeah.
So I went out on my own in '02, and then also got heavily later on into self-directed IRAs. We had an audit, and I told the client, I was real honest and said, I shouldn't represent you in an audit of an IRA. I know some, but not enough. And he said, nobody knows. And so you're honest enough to say it. And we had a really good outcome. I've now taken 2 self-directed IRA cases to tax court and won both of them.
Wow.
So those are our niches, really. Heavy into advising real estate investors on asset protection and taxation, and self-directed IRA people, which is real estate investors, but a lot more besides.
Right.
And those are niches. And then my investing, I used to do more of it, and I had to learn. In my case, there are people who are polymaths, like Thomas Jefferson, who can do anything. I'm really good when I focus. I read a book called The One Thing.
Love that book.
And it really taught me what I was doing wrong. I was doing too much accounting.
Back in
About 3 years.
Okay.
I sold the accounting practice. And by the way, if someone wants a really good real estate CPA, they can email me, and I'll put them in touch with her. And I like to put them in touch by email because I get brownie points.
Yeah.
But I sold her my CPA practice, so I no longer do returns or bookkeeping. I know how, I just don't want to. She does it nationwide. She's outstanding, and she will implement the planning that I discuss.
So
with
you guys
clients.
work well together.
Yeah.
That makes sense. That's good.
And then the real estate I still do, but I've backed off. The good news is because all my clients are investors, I get awesome deal flow.
Yeah, whenever you need a deal, you've
I'm
got
on a bunch of wholesaling lists. My last deal, I was at an event speaking, and somebody said, hey, do you do service of process in Newark, which is 40 minutes east of Columbus, Ohio, where I presently reside? And I said, no, why do you ask? Well, we've got a note to wholesale. And I said, well, how much do you have in it? And they said, it's a first and default land contract, which means in Ohio, you get a deed right away.
Oh, wow.
And they said, it's in default. We got $6,500 in it. And I said, well, here's what we're going to do. Tomorrow, you're going to tell me how much you want, and we're not going to negotiate. I'm going to take it or leave it. Either way, I will buy you a beer. Tonight, my buddy's going to drive by the property and tell me what shape it's in. They came back and said, we want $13,500. And I said, that's a fair deal. I'll take it. It's worth, in its present. I got a place in its present condition worth about 50.
And you're in it for what?
I got
80,
some
20?
rent, not even. I bought it for $13,500. It was $500 for the lawyer, so that's $14,000. I got about $2,000 rent out of it, so I'm in it for about $12,000. And I'm just going to turn around and sell it. I like selling the first generation Latin, like you. I'm of Latin extraction. I like first generation Latin immigrants who came here to work.
Yeah.
And so if you sell to them on land contract for deed.
It's going to happen.
And what I did with this one, I don't want to manage something 45 minutes away, and I have to get a whole new lawyer and all that. Right. So I just put it on the market, and I'll sell like this. I put it in the Spanish language newspaper, 5 down, $30,000 note. So what I like is I'm doing well.
Yeah.
I'm more than doubling my money. And by the way, this is in my 401k Roth. I'm more than doubling my money, so I'm doing well. But I'm doing good. I'm giving a fair price to someone who otherwise...
You're creating an opportunity for somebody that wouldn't necessarily would have had it.
Absolutely. I'm not going to be...
The cool thing is when you do get into doing investing full time and you have all these opportunities, you notice that that's kind of something that it's not necessarily expected, but there's that opportunity to do it if you want to. And I think a lot of people choose that because they understand that it's all cyclical in a way, right?
And it's good business.
Yeah, exactly.
You know, I get referrals. So we do a lot of low income. We're moving to Puerto Rico in January. The practice will continue. We don't even have to change our phone number.
That's awesome.
The reason I'm moving is twofold. My new tax rate, Puerto Rico is very special in terms of taxes. My new tax rate, federal, state, and local, is going to be about 7% flat. Total.
Wow.
So
that's a big deal.
Well, and we're doing well. We're in the highest bracket right now. In spite of all the magic I can work, I still pay close to 50% federal, state, and local. Yeah, well, I mean, so it's a big change. At a certain point, like, doesn't matter how good you structure, like, you're still going to have income, and that's going to show, and you're going to have to... I can move the needle.
Yeah.
I can change the number where that bracket kicks in.
Right.
But if you do well enough, it's going to kick in somewhere.
Exactly.
Now, we do all of our low income stuff. Almost all of it now runs through a Roth 401k, a Roth IRA, or a health savings account. Because of my bracket, I do not like doing cash flow deals.
Attorney or being a real estate investor?
Oh, the attorney part.
Okay.
I got out of law school in '95, so I had the accounting and attorney background, started practicing, in '99 started investing in mobile homes. I read a little book called Deals on Wheels.
Oh yeah, Lonnie Deals.
And what was nice was, you know, it was only at the time, they had their meltdown about 10 years ahead of time. So I was buying trailers all day long for $3,000 and selling them on land contract, and learned a lot of lessons. I was naive as hell when it comes to human nature, and I got taken for a ride like you wouldn't believe.
Wow.
But it was cheap lessons.
But it served you, right? It served you well.
Yeah.
And then, so since you've been a tax attorney, so that's been, I guess almost 20 years at this point, right?
23 years, yeah.
23. If you're looking back, you got all this experience, personal, and then seeing all these success or horror stories of your clients as well. What's the first step to go from being, you know, buying a house in my own name and then deciding to buy it in an LLC or maybe a corporation, depending what the structure is? How do you know when you're ready to have that conversation?
I would have the conversation up front.
Okay.
So, and people say, well, that's self-serving. You get paid to do that. But let me ask. It, right? Setting up an LLC is actually pretty easy. We teach people how to do it. I always use the joke, I said it last night when I spoke at the group here in Asheville, it's a lot like having children. The process of making one's fun and easy. But once you got one, there's time and money and effort involved. Same thing with LLC.
And I'm sure it changes over time, right? Like whatever you do the first couple of years with an LLC, you've grown. There's things change, so you have to treat it. And
once you have more assets and income, or once you get in the different lines of businesses, you're going to tend then to complicate the picture. But there's a benefit at that point.
So what is the best way to know if I'm starting out? Like, how do you know when to complicate things or not? Right? Is there a magic number? Like, well, I know I now own 5 properties. Now it's time to like do something a little bit more complex, or is it really just individualized and it's hard to?
Depends on the line of business. That's very individualized. I would say each line of business may, not necessarily shall, but may justify a separate LLC unless it's a tentative line of business. For example, let's say you're flipping or assigning contracts and you decide to become a real estate agent. That's a tentative business. A lot of people get started and don't succeed. I'd probably run the real estate agent business out of the flipping entity until you got proof of concept.
And know that that's actually something you enjoy.
Yeah, why spend the money? Do things, but a separate line of business, I would say when you're buying and selling properties, meaning you actually take title, a simple LLC works for the first 6-7 deals, roughly speaking, and that gets into issues of dealer status and how the taxation changes once you've done enough deals. If you're assigning deals, that's a pretty simple setup. So until you get to like 150 grand of net income, you're probably fine with your initial basic setup. And on rentals, it's a size thing. I would say once you got about 200 net equity in your rentals, you start looking at changing the structure from just one LLC.
So you're doing off of equity.
Yeah, because there's this theory that you should have one LLC per property. It's lunacy.
Yeah, because if you only have $5,000 equity per LLC or something like that, it's irrelevant.
And here's the theory. Well, because I still buy properties for, we were talking about some of our deals. I'm still buying stuff for 15, 20, 25 grand. Now they're harder to find, but they're out there. So one LLC per $20,000 property. There are 2 problems with it. No judge is going to respect that small equity. Second, you're never going to maintain it right.
Yeah.
There's work involved for each LLC.
Yeah. The maintenance of each LLC in a situation like that could be like the profit for that whole rental almost, right?
In terms of time, right? Maintaining an LLC doesn't take a lot of money. And yes, I'm an attorney. Yes, LLCs are important. But the economics drive the legalities. So what should you be investing in the beginning? A little bit of asset protection, a little bit of tax planning, but a lot of education and marketing.
To try to build up.
Once you've got the income and assets, you start putting more into it. So overdoing it has often been a problem. And I would say not doing the backroom admin work. For example, more important than an entity in the beginning, good records, good bookkeeping. And we do teach a lot of clients how to keep a good set of books, track things, make things deductible, not have to fear the audit.
That was a mistake that I made for a while, is when I first started, I didn't spend a lot of times on the books per se, because I was like, oh, it doesn't really matter. There's not much there. Just go out, try to find the next deal, etc. And it wasn't until I was about I think it was 3 years in where I was like, oh, this is, and then it took a long time to clean up the first 3 years.
It's important data.
Yeah, it is.
You guess without books how you're doing. You don't really know. You think you know. You don't really know how you're making your money, what's costing you what. The reason they call them the books is they tell a story. And if you don't know that story, you are not in charge of your ship.
Yeah, and something's going to happen and you're not going to understand why or how it happened. And then
time and effort into learning. You got it. Both tax-wise, in terms of audits and planning, handwritten return is a huge red flag. It tells them it's amateur hour. I had a client just get audited, and he's on the other end of things. He's pretty wealthy. And the IRS auditor looked up his house, which is a mansion, and said, this guy is writing off a boat 100%. And it was, by the way, a bogus write-off. Yeah. He didn't have an accountant who stood up to him. He kind of bowled over the accountant.
I want to write this off.
Just do it.
Yeah.
Where I'll tell someone, look, I'm aggressive. I want to save you money. But if it's bogus, I'm going to tell you I'm not doing it.
And if it's not going to save you money if you get audited.
Right. So, well, here's what happened. The agent said, because I asked him, and he not only did he audit, he was very hostile. And I finally asked him, what's up with that, man? Did I pee in your milk?
Yeah.
Why are you so bent out of shape? Why can we get you some Quaaludes? and he said, look, your client is very wealthy, has a very nice house, hasn't paid taxes in years. He sent his child on a cruise, his 7-year-old, and wrote it off as a business expense. He writes off the boat, which I know is not 100% used for business, etc. I mean, really blatant stuff.
So he was just kind of frustrated that somebody's just taking advantage of the system, if you will.
And frankly, on a few things, he had him dead to rights. I had to have a talk with the client because he got mad. He was like, look, your job is to get me off. That sounded wrong. Your job is to, trips are somewhat questionable. Do you have a log of who you took out on the trips? Did they ever buy anything from you? Who were they?
Yeah.
And I said, that's all stuff you got to do. And you may not like it, but that's what you got to do to get the write-off. If you want to write it off,
then it kind of goes.
And look, I don't make the rules. Yeah. I don't like the people who do.
But you know the rules, and you know your way through it.
Yeah, and so now I said some other things that the agent, because he's mad, is going after. And we have already sued because he audited 3 years. So we've already sued in tax court for the first year because there was some stuff where the agent was so mad, his emotions got in the way, and he went overboard. And so the nice thing about tax court, there's a special court where you can sue the IRS. And that court is specialists, and they tolerate no BS from anybody. I wish every agency had a court, like an EPA court, and a Department of Labor court, and a code enforcement court, just that really knows their stuff, specialized, as opposed to generalist judges who kind of guess.
Yeah.
So bottom line is, red flag, that's a big one. Just being stupid abusive. Aggressive is good.
Abusive isn't.
Stupid abusive, especially if you never show profit, with the exception of rentals. Rentals, because of the way the depreciation works, oftentimes won't show a profit, and the IRS knows that.
They understand it.
But with a business like buy,
are you living in that house?
Then they start thinking, well, is this really a business? What the heck's going on here?
Yeah. Well, transitioning into other areas, I know you do a lot of stuff with, obviously, as we mentioned at the beginning, IRAs and things. I think that's just something in the last, when I first got into real estate in 2012, IRAs was barely ever talked about. And in the last, say, 2 to 3 years, I think it's kind of become a lot more popular. I don't know if that's a time frame.
Yeah, it's getting known.
Right?
It's getting known.
Yeah.
You know what did it?
What did it?
Mitt Romney.
Oh, really?
Yeah, Mitt Romney in the 2012 election.
Yeah.
The dude had somewhere between 20 to 100 million in a self-directed IRA. First of all, how brilliant is that?
Yeah.
And second, once people became aware of that, including Congress, there's a senator that wrote a law based on that.
Really?
And it didn't get passed because he thought Trump was going to lose. Everyone did. And he got a nasty surprise come November. So this law is sitting there. But it would basically ban Roth IRA investing. Now, there's no chance of that being enacted in the next couple of years. For it to have any chance, the Dems would have to sweep.
Right.
But it does mean you should act now, because one thing in that law, it grandfathered everything.
Okay.
So if you can grow your Roth IRA now, let's say you need to use hard money because there's not enough money in the account to buy straight out. Or if you're doing rentals. But I also use health savings account and Coverdale educational savings accounts.
Right.
I use all of them. Let me tell you who these are perfect for.
Okay.
Two groups of people.
Perfect. Yeah, go for it.
If you're making enough money that you're just going to reinvest the profits from your deals. That's me. I live on 20% of my law practice income. Right. All my deal flow is just going to get reinvested. I'm not going to touch the money. So I don't care that it's in an IRA.
Because you don't need to pull it out to live on.
Exactly. So if you don't need all of your investment money to live on, or you're 60 or older, if you're 60,
you can do it in there anyways, right?
You can do a Roth
and pull it out.
Pull the money out tomorrow and pay no taxes. So if you run your deals through a Roth at that age, or if you inherit an IRA, or if you inherit a Roth, and that can be arranged, if you inherit a Roth IRA, you can pull the money out at any age. Why would you not run all your deals through that account?
Yeah, no, it's that's what I've heard. It's like, of course you're going to do that. So,
and there are caveats,
of course,
right?
There always is, though,
because what is it with the Spider-Man? With great power comes great responsibility.
Yeah.
Same thing. These accounts give you a vast amount of power, but there's a lot of rules. There's some complexity.
Well, you have to walk between the lines correctly,
and the lines are in the case. The lines are third rail. If you do what's called a prohibited transaction in any of those accounts except a 401k, it destroys the account.
Right. Everything that's been done.
So huge power. Live tax-free is not a joke. It's possible.
Yeah.
But also, you got to do your homework or delegate to someone who knows their feces. Because if you don't, you're going to step in it.
In trouble. Yeah.
And the IRS is aware of it.
Yeah. So, with all your things you're doing nationwide, talking to all these investors, have you noticed? Do you feel like you have a good pulse on trends and things that are going?
Oh yeah, people talk to me.
Yeah. So I'd be really curious to know how you see, what's happened over the last 2 years, and then maybe what's going to happen in the next 2 years moving forward. If you have any inclinations or.
I'm selling everything.
You're selling everything now?
I'm sitting on first of all my properties that are not in Roths that I've acquired previously we're selling. And look, I could be dead wrong. Here's the problem. When predicting the economy, it's like I got an aunt who's 92 and she's got cancer and heart disease. We know how this ends. I can't tell you the day.
Right.
And some of them are stubborn and mean enough. They might make it it's like a black hole. When you get nearer to a black hole, the laws of physics change.
Right.
Same thing when you get close to zero rates. So even if they raise the rates, they're close enough to zero that dropping the rates from, let's say they raise it to, 2%, 3%, whatever, dropping that to zero ain't going to mean squat once the feces hits the rotating blade device. They have abused the tool for political popularity. Democrats and Republicans both. The Democrats pioneered it because they're good with socialism. The Republicans said, well, to be politically competitive, we need to do the same.
Gotcha.
So rates have been used to artificially inflate the economy. Here's the problem with debt.
So now they're going back up. What's going to happen?
One day you got to pay it back.
Right.
And that's when you get a nasty, massive deflationary recession, which for us is an opportunity if what? You're prepared and you got access to cash. So I'm cashing out. Now, could I be dead wrong? Yeah, but I am putting my money where my mouth is.
Right.
The stuff we bought 09 to 12 has doubled to tripled in price.
And so you're cashing out on it.
And when people feel insecure, because a lot of this is feelings.
Right.
So when the market crashes and people just feel insecure, they might have the money to buy,
but they might not.
But they'll sit, even if they do,
they won't take action on it.
Fear. Right? They sit on it, they don't buy, asset values deflate. that's when we're going to buy.
Right. So you're selling now. When do you anticipate your buying cycle to
God
start?
only knows, because
You're going to take a guess, knowing that it's a total guess, right?
5 to 10 years.
Okay.
Because here's the thing. Again, the government has abused its power to be popular, and they've taken away a lot of their own tools. So I think, similar to Roosevelt made a depression into the Great Depression by his policy,
Right.
I think we're following policies that will make the next crash far worse than it has to be.
Really?
Left things alone instead of being flat out anti-business. Look at the difference Trump has made just psychologically, much less with the tax cuts and all.
Right.
Just psychology of, I'm not going to smash business. And he is quietly, you don't hear it in the press, but he is reining in the bureaucracy, which if you've ever had a run-in with the IRS or the EPA or OSHA, or hell, just local code enforcement, you know how much it can stall your business. Well, the pendulum's going to swing. It always does in American politics. And the other side's going to get in, and they're profoundly anti-business. The worst thing you could do in a recession, raising taxes, adding more regulation, and yeah, the Fed will drop rates back down, but that's going to have a lot less effect than you think. It's like a drug. When you're addicted, you need ever greater quantities.
So it's
well, how do they drop below zero?
Well,
How do you drop rates below zero?
Yeah, it's happening in Europe though, right?
Negative interest rates, historically unprecedented.
So,
and think about the distortion that causes. You give the bank money and they keep a portion for the privilege?
Yeah. That's
What kind of distortion will that cause?
I mean, I don't think there's going to be, well, who knows?
Here's where it helps us.
Yeah.
Because we profit off of human stupidity.
Yeah, I guess
No, it costs us,
right?
but we also
But it goes
profit.
both ways, right?
So if rates
Creates a
are
market one way
artificially
or the
low,
other.
my parents have saved their whole lives, and they can only get a fixed return in the market on bonds of, let's say, 1 or 2%. So when I say, would you lend money to my IRA, because your IRA, if it's done right, can borrow and grow that way, will you lend money? Now, I can't borrow from my parents, so it'd have to be someone else.
Right, as an example.
My IRA borrows from someone else who's desperate for return because of the idiocy of zero or negative rates. And I say, I'll give you 6% on a secured piece of real estate. You know, 20 years ago, they'd have laughed. I'm not lending to your IRA.
But now they're going to consider it at least.
Human stupidity drives them into our arms. And those who are prepared can profit even in the worst of times.
But you're also helping somebody else profit in a situation where they're looking at 1%, 0%, 2%.
Honest capitalism. Well, it's like we were talking.
It can be a 10x growth in some situations.
I bought a property, as we were talking before the call, super cheap, and I sold it on land contract cheap. If you look at the numbers, I did well for myself. If you look at how I'm treating the other guy, I did good. Likewise, you got to take care of your investors. You give them a good return they couldn't otherwise get. But you honor and respect their money. You don't take stupid risks. You treat it as if it were your own, or better than if it were your own.
Well, then that creates that cycle where you get to keep doing deals, they get to keep their money moving, everybody's happy. That's a good ripple effect to have.
Long-term thinking.
Yeah, absolutely. Well, John, really appreciate the time, and definitely has been a fun conversation.
Thank you much.
So thank you so much for coming on, and I know you're coming back to Asheville next month, right?
Saturday, June 16th.
Okay.
If people Google the local Real Estate Investors Association, it'll be on their calendar. If you Google Asheville RIA, even though I know they don't call themselves a RIA, Hyer, Hyre. June 16th, I'll be coming back to teach a whole day, about a half a day of bookkeeping and about a half a day of IRA investing and tax planning, with emphasis on IRA investing. Do you care if I give out my website?
No, go for it. I was going to ask you if you would anyways, and we're going to be putting out the link for the Saturday event in the notes and whatnot, so people can
There
find it
are
as
two websites that link to the same place. If you're looking for first-class consulting, we do this nationwide. Tax planning, and if you're in a fight with the IRS, be it an audit or they're collecting on you, we do that kind of work nationwide as well. So realestatetaxlaw.com, realestatetaxlaw.com, and IRAlawyer.com.
And we'll include both of those in the show notes as well to make sure that you can get it.
I got those URLs virgin, like 12 bucks a pop.
How long ago?
IRAlawyer.com, like 3 years ago.
No way. 3 years ago, it's still available.
And I've already had offers to buy it.
I'm sure you did.
I bought a bunch of kissing cousins too.
Yeah. Well,
realestatetaxlaw.com I got back in '02, so that was like 15 years ago.
The domain thing is, I buy domains like almost once a month, where I'm like, oh, wake up and you're like, oh, that's a good one. I'm going to buy it. Yeah, absolutely. Yeah. So cool. Well, you guys, thanks so much for tuning in. If you guys enjoyed listening to John and want more information, we're going to include both those websites there. If you're in Asheville and you want to listen to him speak live, we'll be there. What's the date again?
Saturday, June 16th. It'll be roughly from 9 to 5 with a bit for lunch, so about 7 hours. That's the time to get me to ask questions that are topical, right? I'm going to talk about bookkeeping and IRAs and tax planning. So if you have other questions, I'm not going to answer them then. But it beats the hell out of $400 an hour.
Yeah, no doubt. So if you guys are in Nashville, hope to see you all there. And John, once again, thanks so much. And
pleasure.
Hope you enjoy the rest of your time here.
Take care.